For now, Anuj is standing by with what he's making of the market setup. Anuj, good morning. There's a bit of relief as far as oil goes this morning.
Absolutely, Prashant. Good morning. And, market's got some good cues going for it. Let's see if today we latch on to them. There's, of course, a combination of domestic and global cues. Infosys numbers post-market hours and Bajaj Auto also post-market hours. So I think that could be the most important cue, especially Bajaj Auto, given the kind of domestic economy that we are in. The risk, of course, is from global market with Fed Chairman Jerome Powell putting a bit of a risk on the interest rate cuts, especially with that core inflation data remaining a bit sticky. But domestic earnings are very strong. Look at Angel One. It tells you the kind of market we are in or kind of domestic economy we are in. The other thing I'm latching on to is FI positioning in index futures. And once again, it tells you why, whenever FIs are long, the markets actually fall. And when they go short, the market rises. Look at that, 59% long. They were just about 7 days back. And now we are at 36,000 short. So I think that's also another good cue to look at. Put call ratio also at 0.76. Normally, that's the bottoming out zone, 0.65 to 0.76. So let's see. On the Nifty, it's all about 50-day mark, the 50-day exponential moving average. We closed just above that. That's the support, 22,080 to 22,120. That's also where Tuesday's low was. And the bigger support is 21,920 to 21,970, today being expiry, looking at the weekly option side. On the upside, the first resistance is 22,214, Tuesday's high, and then 22,260 to 22,325 based on options. If you start to cross 22,260, expect big short covering. On the Bank Nifty, the support is 47,316, Tuesday's low, and then 47,223, again 50-day exponential moving average. And resistance comes in at 47,609, Tuesday's high, and then 47,720, 20-day exponential moving average. I'm watching out for Nifty IT also very closely today. It's in a make or break zone, the Nifty IT that is, very close to 200-day moving average. Tuesday's low was 33,504. The current 200-day moving average is 33,440. Since June 2023, which is when it started to outperform the market, it's not spent a day below the 200-day moving average, 200-day simple moving average. So in that sense, it's very important because Infosys comes out with numbers. Going by the price action, it looks like the market is expecting a shocker from Infosys in terms of guidance. That could be the reason, why it's fallen like it has over the last few days. Infosys itself is already below 200-day moving average. And one thing about IT stocks, TCS, for example, you could argue the numbers were not great, but the numbers were not bad either. So, but it could not sustain any kind of rally, and it's also approaching the 200-day moving average. So the index is weak, but very close to 200-day moving average. Sometimes, things bottom out with the worst of the news. So let's see if that happens with Nifty IT. Very quickly, I'll leave you with quote of the day. It's a good one. I mean, I like this one. It's better to fail in originality than to succeed in imitation. So that's the quote.
Okay, we missed you, Anuj. I think I missed the quotes more than your market update. So welcome back.
Thanks, Sonia. I missed being here and being in Mumbai. I tell you one thing, there's no better place than Amchi, Mumbai. So just missed that and happy to be back.
Where did you go? I mean, I
had gone to Singapore. I had posted an image. Samir also.
Yes.
Yeah, I liked it, but happy to be back. Yeah.
What about the weather?
That's
you can't say that about Mumbai weather.
Trust me, Sonia, go to Singapore, spend a week there, you would love Mumbai weather. Trust me on that.
All right. Anuj, thanks very much for that. So that's a nice quote and, of course, a setup on the markets as well.